Short-term rentals have absolutely massive tax benefits. For example, you could use the short-term rental loophole to use losses from your short-term rental business to offset your income from your job or your business. There are taxpayers that are doing this. But if you don't know how to choose the right short-term rental property, then your ability to capitalize on these tax benefits will only be reduced. So in today's video, I'm going to talk about exactly how to choose the right Airbnb property to both maximize your tax benefits and to optimize the success of your new Airbnb rental. Also, I'll be answering a few questions that came over for some of my subscribers in the comments section. So if you're interested in hearing how I answer those questions, be sure to stay all the way until the end of this video. Without further ado, let's dive in. All right, guys, rule number one, the 80-20 rule. The 80-20 rule is a rule that states that the property you buy should have at least 80% of its value contained in the building structure and improvements, and 20% or less contained in the land portion of the property. Now, the reason why this is the case is because the IRS only lets you take depreciation on the building value and improvements to a property. In other words, it will not let you claim depreciation for land. This is because land never really deteriorates or breaks down. It's just land. No matter where you buy your property, the building will be on a piece of land that has been there for countless thousands of years and will be there for countless of thousands more. So to optimize our depreciation deduction for Airbnb properties, we have to look for properties that have a good building to land ratio that it's at least 80-20. If you can find one that's higher than this, even better. You'll be thanking yourself later at tax time when your depreciation deduction is significantly higher than it would have been if you had bought a property with a low building amount and high land amount. Here's another rule. Favorable regulations. If you're new to Airbnb, then you might not be aware of this, but not all towns and not all cities allow Airbnbs. Some have outright banned them and others have extremely strict rules for them. For example, both New York City and Washington, D.C. have very strict rules for them that can make it a lot more difficult to have a successful Airbnb up and running. In the city of New York, currently, you're not even allowed to rent out your entire apartment or home to visitors for less than 30 days, unless you, as a host, are also present during the stay. This is due to the New York City's multiple dwelling law. Washington, D.C. has a similar law that only lets you rent out your property for 90 days per year unless you are present at the property during the rental periods. So you want to look for towns, you want to look for cities that don't have extremely strict laws for Airbnb like this. There are many different towns and cities in the United States where the Airbnb laws are much less strict than the New York City and Washington, D.C. markets. One thing you should know when you're doing research on places is that Airbnb actually provides a lot of information about the short-term rental laws for different locations on their website. To view this information, go to Airbnb.com, click on the drop-down menu in the upper right corner of the website, click on Help Center, and then type in the name of the location where you're thinking about buying a rental property. Once you do this, you should be able to see some of the resources that explain the short-term rental laws in that area that can help you determine whether or not it is an ideal area to buy a short-term rental. This process can help you to identify great places to have an Airbnb rental for taxation purposes. My number 3 rule is high tourism. In addition to paying close attention to the regulations in the areas that you're looking to buy an Airbnb, you should also look for other factors that could impact your profitability. One other major factor that you should consider is tourism. The bottom line is that your Airbnb will be more likely to perform well from a profit perspective if it is in an area where there is a high demand for short-term rentals. This means that you should look for places that have a lot of tourism, where a lot of people are traveling to and from regularly. Many people choose to set up Airbnbs close to tourist attractions like national parks, casinos, concerts, venues, museums, popular beaches. Others simply set them up in cities that have a lot of people. The bottom line is that if you want a lot of people to book your Airbnb, then you need to set up your Airbnb in an area that has a lot of demand. It can't be out in the middle of nowhere. If you're not sure whether or not your Airbnb will have enough occupancy, there are some helpful tools that have been created for you online, such as AirDNA or Rabu, that can help you predict what the occupancy rate will be for your Airbnb. You can use these tools to get a relative idea of what to expect in terms of occupancy. However, keep in mind that these tools are not 100% accurate, but the higher the projected occupancy rate, the better. And number 4 rule, amenities and unique selling points. When selecting an Airbnb property to invest in, it is crucial to keep in mind that you will be competing with other Airbnbs in your area, and you have to be okay with that. 2 of the main things that can help your property stand out amongst others is the amenities and unique selling points. When I say amenities, I'm talking about the things like hot tubs, pools, and saunas. You gotta invest in that. When I talk about unique selling points, I'm talking about things like beautiful places, architectural elements, amazing views, anything else that makes the property just stand out. When you're evaluating properties and asking yourself, why would someone want to stay here? Why would someone want to be here as opposed to a property 2 blocks away? If there is no obvious answer, consider looking at a different property. You can also do a search of local Airbnbs in that area on Airbnb.com to see what other amenities your competitors are already offering. This can give you an idea of what kind of amenities people are looking for in your area that you should look to have in your Airbnb. Some amenities can be easily added to a property after you buy it, such as like an outdoor grill or a workout station or a workout equipment. However, other amenities such as a pool cannot easily be added. So consider this when you're evaluating properties to buy, when you're thinking about amenities. And my rule number 5 is budget. Just as you need to consider your budget when you're buying a primary residence, you also need to consider your budget when buying a property to use for Airbnb. You should have a clear understanding of what your budget is before you make your Airbnb purchase. Keep in mind that many properties need renovations and upgrades before they are ready to be listed on Airbnb. So, if you're thinking about buying a property that needs renovations, then please make sure that you're factoring this into your budget. If you're buying a property that is turnkey, please factor repairs into your budget. The last thing that you want to do as a new Airbnb owner is to go above your budget and then be already starting off with a difficult financial situation when you're just trying to launch a new business. This can make the entire experience a lot more stressful than it needs to be. You'll start resenting real estate, and instead focus on finding a property that meets the other criteria I mentioned in this video, that is comfortably within your budget. This will give you more breathing room. It'll prevent you from getting overly stressed out when you're just getting started with your Airbnb, and you can focus on optimization and tax savings. In addition to factoring renovations into your budget, you should also factor in other costs associated with running an Airbnb. This includes the utilities, the Wi-Fi, the cleaning services, restocking the supplies, the management fees if you're going to be hiring a manager other than yourself. In other words, the mortgage is definitely not the only expense that you have to cover when you go into Airbnbs. There are many other costs that you will have to be ready for to cover, so don't overlook this. I'm gonna go into greater detail on these costs in another video where I'll explain how to run an Airbnb successfully as I've done so, but stay tuned for that video. To summarize today's video, in order to choose the right property for an Airbnb investment, look for properties that have at least 80 to 20% building to land ratio, that are in areas with favorable regulations for Airbnbs, that are in areas with a lot of tourism, that have good amenities and unique selling points, that are within your budget. If you can find a property that meets all of these criteria, you will most likely be in very good shape. Okay, now as promised, I'm going to answer a question from a subscriber about short-term rentals. This question is from Dave Sarkipasto 9886, and he asked on my short-term rental tax video that I did on the Social Proof podcast. Here is his question. Hey Karlton, can you do the short-term rental strategy for the first year in order to accelerate depreciation and then switch to long-term rentals moving forward to write off the standard depreciation? The answer is yes. I did this in 2020. I bought a short-term rental, leveraged a short-term rental in the last few months of the year, did accelerated depreciation with a cost segregation study, created a $168,000 rental loss, offsetted the rest of my tax bill that I had for that year. In the following year, I converted it into a long-term rental, and now it's been added to my portfolio. This is how you build real wealth. Okay, thank you guys so much for watching this video. I appreciate you being on this video. If you could do something for me, like, comment, subscribe, share this with one other person that is thinking about getting into Airbnbs or doing the short-term rental loophole, and let me know your thoughts on this. Do you have any questions as it pertains to this video? I would like to know below. If not, I'll see you in the next video. Cheers.